Hello, good afternoon, everyone. Welcome to the marketplace. Coming up in this bulletin, Cedi recovers strongly from recent pressures as demand normalizes following improved dollar auction by the Bank of Ghana. But is that sustainable? We shall be finding out soon. Also in this bulletin, Finance Minister Dr. Kasiala Tuforsen secures approval to spend 357 billion cedis from next year after Parliament passed the Appropriation Bill for the 2026 budget. Bank of Ghana Governor targets single-digit interest rates next year as part of measures to support businesses.
I am on record to have said that I would want to see lending rates below 10% before the end of my tenure. And it is one thing I pray for each morning.
We have details of this and more for you. Please stay on. Thanks so much for your time. I am Pius Kojobaka, looking at our stories. The recent pressure on the city appears to have slowed significantly since last week. We have more for you in this report.
2 weeks ago, was witnessing some marginal depreciation on a daily basis against the dollar. Now, that was based on the quote from the commercial banks, as it was even getting close to 12 cedis to a dollar mark on the market. Some persons, like Executive Secretary of the Chamber of Petroleum Consumers, Duncan Ahmad, argued that it was due to the market response from the recent clampdown on black market operators. However, the situation has improved slightly, especially from last week. VES has seen the interbank rate slow to about 11 cedis, 45 pesos. There has not been any official reason for this development, but some market watchers are linking it to improved dollar auctions by the Bank of Ghana, as the demand for the dollar is actually showing. VES, they say, is due to the holiday season that is approaching. All these developments have aided in improving the Cedi's fortunes over the past few days. Persons close to the Bank of Ghana have also downplayed concerns that the relief being recorded can be described as a brief one. They argue that based on the work that have been done so far this year, they don't see the Cedi encounter any depreciation in the first quarter of next year. The governor of the Bank of Ghana recently noted they will press ahead with some of the programs that have gone a long way to stabilize the Cedi going into 2026.
All right, so let's explore this further. Joining me via Zoom is General Manager in charge of macroeconomic research at GCB Bank PLC, Courage Buti. Courage, thank you so much for joining us here on the marketplace. And first off, we want to understand what's driving the Cedi's recovery. Is it mainly due to the Bank of Ghana's improved dollar auction, or there are other factors at play?
Good afternoon to your listeners and Merry Christmas. So the situation is fluid, right? It's hard to anecdotally place a finger on, okay, this is the driver, that is the driver. What we are seeing are swings. And for me, I think I have said since my half-year review that I expect the Cedi to end the year, I think from my revised projection at the 12.1 levels, thereabout. It looks like it will close lower than that. To the extent we are within that range and not exceeding it, I'm actually quite comfortable. The daily market dynamics, shortage here, increase in supply there, sentiment here, sentiment there, interventions here, interventions there, would sway the market up and down as need may be. But we know that the LCs to be settled from January onwards. And so if there is supposed to be some sense of maybe fair pressure to be expected, it will be around that time. And that is where the interventions of the Bank of Ghana around that period will be kind of critical. Or what role they play around that period will be critical. But for me, the movement we're seeing now, moving from 10 to 11, now around 11.43, they're about an interbank market and slightly above that on the retail market segment. I feel reflection of where we are on the market and then the sentiment, which for me are very normal. we are on course to end the year net appreciation, and that is the positive. I don't think there is too much meaning to be put into the intraday movements that we see, bar the usual market movements.
But given the Bank of Ghana's intervention, is this recovery a temporary fix or a sign of long-term stability, you think?
We've been here. We've seen up-down movements. I think that's the point I'm making. We've seen up-down movements. As and when the situation may be, it may respond to interventions on the market. It may respond to changes in sentiment. If anything, positive news at all. We've seen just the IMF now approving the FIT program review and all that. So all of these are positives, I believe, for the market in the moment, right? So in any case, we shouldn't be expecting some of these movements to start with. So it is very normal on the market. I think once demand supply interplaying, we are in a period where demand has peaked. It should be expected that these trends will continue.
What's going to be the impact on inflation? Has the Cedi's appreciation so far helped these inflationary pressures, you think, in the country, largely?
The transmission, I believe, is fairly contained. We are in a low inflation regime, I believe. The drivers of inflation, I believe, are firmly anchored. And so to the extent Cedi is not moving into the region of top 13 into 14, thereabout, I think the inflationary pressure will be largely contained. If you are seeing push from the exchange rate pass-through, we are also seeing on the food side of things a deceleration, a reflection of what has happened in the economy this year. We've seen from the petroleum tariff side, we've seen from other tax policy sides, the impact it's having on inflation. So I think the outlook is fairly balanced, and I don't expect there will be sharp upticks in inflation in response to immediate exchange rate movement, unless we are seeing depreciation surge to point levels below what we expect currently on the market. I don't see a sharp distortion to the inflation momentum coming from depreciation.
And I'm glad you mentioned that. But again, what's going to be the outlook for Ghana's international reserves? Will the Bank of Ghana continue to build reserves, and how will this support the Cedi largely?
Well, I think the reserve strategy from gold purchase has worked very well. You look at the data. The threat for me is, and if you analyze our export earnings, about 83-85% of our export receipts are from our commodity exports, largely gold, oil, and cocoa. And then the other exports, what you call your non-traditional exports, is accounting for just about 13 or so percent of 17% or so of our export receipts. That is not healthy. That is not sustainable. And that is why I feel that once the gold strategy, gold board, gold for reserve strategy has worked quite well, we need to now move into the arena of diversifying the sources of reserve accumulation, so that, and cocoa prices are not at the levels that we know them to be. They will retreat at some point. Gold prices will retreat at some point, so that when that retreat is done, we can actually be able to sustain reserve accumulation. Another bit is that the level of intervention on the market today is because of gold and how central it is to our reserve accumulation. If you may still buy as much gold, but it may not give you as much in receipts if all gold prices fall. We don't expect that to be immediate, but they will fall at some point. If we do not let the market sources drive FX dynamics in the long term, when gold prices fall and you buy so much but do not earn so much in terms of gold receipts and how it will impact your reserve, then your ability to sustain the intervention of the market that is delivering the stability may be affected. So from this point on, I feel a balance is what is required, where we find other market sources that can balance our reserve accumulation, and not solely the reliance on gold that we have seen in I think over 2 years now.
All right. Having said that, what's going to be your outlook for the Cedi's performance as we enter next year, basically?
I expect Cedi again to be largely stable. There will be slight depreciation, I believe, along the way, but not one I expect to be pronounced. In fact, my projection is looking at around 13. I think the middle side of 13 by close of the year. I do acknowledge that that sounds ambitious and dependent on budget execution first and foremost, and especially when we are exiting the IMF, the fiscal pause thereafter will play a significant role. We are reopening the domestic debt market. The appetite for debt and approach to it will also shape sentiment around that. But ultimately, I think that the market sources should begin to improve, at least from the portfolio side as the market reopens. FDIs and then call it remittances would also, I believe, begin to peak again. And those should diversify or, if you like, improve liquidity from market sources. And I think that should ultimately, if the fiscal stance complemented and then the Bank of Ghana's disciplined approach to monetary policy is sustained, then I feel that we could sustain another run of stability in exchange rate, albeit very mild depreciation into next year.
General Manager in charge of macroeconomic research at GCB Bank PLC, Courage Buchi, thank you so much for your time this afternoon speaking to us on the marketplace. Now, to one other development story we are following up for you. The Finance Minister, Dr. Kasela Tuforsen, now has the legal backing to spend some 357 billion cedis from January 1 next year. And this was after Parliament approved 557.1 billion cedis in appropriation for 2026. This will also give the Finance Minister the right to start doing the necessary allocations and disbursement to the various ministries, departments, and agencies. However, since the new year is yet to begin, allocations will be drawn from revenue mobilized from the last quarter of this year. And government is seeking to raise 268 billion cedis for this year. But how do we ensure fiscal prudence and avoid budget overruns? Let's explore that. Joining us via Zoom as well is economist Professor Patrick Isuming. Thank you so much, sir, for your time here on the marketplace. And the question we are asking, what measures must be put in place to prevent budget overruns and maintain fiscal discipline?
Good afternoon and good afternoon to viewers. Thanks for having me. I think in the main, a lot of the measures have been put in place. If you look at since the new administration came in, the Finance Minister has implemented this rule that says that you can't award any project until you have express approval. And I think because of that, it's relatively easy for the Finance Ministry to control the spending. If you look at when we're going to the IMF program, one of the main sources of overrun is expenditures outside of the budgetary allocations. So as it stands, if there's any overruns, then perhaps it's the Finance Ministry who has to answer the question. So in the main, the regulations have been put in place. And I think there's still a lot of ongoing things. We've seen that they are now adding, they are connecting the governments to the electronic procurement system. So all of these are in place to ensure that nobody can commit the government, without the express approval of the Finance Ministry. And
all right.
Don't forget, last year, if you look at the template that the Finance Ministry used last year, when the revenues were not coming, he wasn't spending. So I suspect that he might use the same thing and will be able to keep expenditure under control.
That's fine. How will the allocated funds, for example, impact Ghana's economic growth and development, particularly in key sectors like agriculture and infrastructure?
Well, one of the things that got me excited about the budget was how much allocation was made to CAPEX, capital expenditures. So I think CAPEX is one area that saw the biggest increment in terms of our spending. It tells you that the government is planning to improve on the infrastructure and spend in areas that will bode well for our long-term growth. So I think that's a good thing. The other thing that I liked about the expenditure plans was how much was devoted to arrears clearance. You've seen that the arrears has been a major and ongoing issue. It affects not just the contractors, but also the banks who are owed these arrears. So I think yesterday I heard in the news that the president is asking the Finance Ministry to devote some money to pay. And there was a huge allocation made for arrears clearance. I think that's a good thing. Then the other thing is the specific programs outside of the big push, the agri sector. Personally, I don't think that the government needs to spend so much time building farms or doing. There's a lot of things going on already. There are a lot of individuals who are doing great things. There's a lot of people doing processing. So what you expect is the government to spend more time coordinating and then using its spending power to direct. If government decided that all the procurement by government agencies are going to be sourced locally, I think that would be a big enough push without spending any extra money, given the circumstances that we are in. So I think that, there are strategies. The power of public procurement is something that we should not underrate. While the government is not in a position to maybe set up factories or build farms and produce, it can definitely provide ready market for Ghanaians who are already doing some of these activities. So I hope that they continue to do that.
Okay, let me find this from you, Professor Isumeng. Again, we want to explore this. How will the government balance its expenditure priorities with the need to manage its debt burden and maintain fiscal sustainability?
So if you look at how the budget has been done, it's clearly incorporated the fact that we can't spend monies we don't have. Can you hear me?
Yeah, I can, sir.
Okay. So the budget already incorporates that we can't do Eurobond, and all the sources of external funding have been clearly accounted for. So we are only going to get something from the IMF and something from the World Bank. That's pretty much it. So in essence, the budgeting is already incorporating our debt service and all the payments. So the most important thing really is to stick to the plan. Make sure that whatever we've put there, we execute it as planned. And you have to say this year, the execution has been very good in terms of making sure that we don't do the overruns. I think it's beyond when we exit the IMF, that maybe if you're in a hurry, then you might decide to go and look for that kind of external funding. I think that's where our problems will come from. But at the moment, if you look at the budget that was presented, it's clear that proper cognizance has been given to the fact that we have this cap on debt that we can accrue up to 45% by 2034. So far, it looks like we are sticking to the plan.
All right. Thank you so much, Professor Isumeng, for your time. He's an economist speaking to us here on the back of the passage of the Appropriation Bill. All right, still watching the marketplace. Let's pause for a breather. We'll be right back with more. Hello again, welcome back to the marketplace. The International Monetary Fund is making a strong case for the implementation of needed policy reforms that will help restore macroeconomic and debt stability. The IMF expressed these concerns after it passed Ghana on the 5th review in Washington, D.C., USA last week. More in this report.
The IMF board, in a statement, argued that it is very important for government to go this way to help fast-track the expected full recovery of the economy. It also announced that Ghana is on track to achieve a primary surplus of 1.5% of GDP by the end of this year. This will be driven by revenue mobilization and expenditure rationalization. The fund went ahead to highlight the importance of sustaining fiscal discipline, which requires stronger revenue mobilization, improved public financial management with better oversight of state-owned enterprises. The country's 2026 budget that was recently approved by Parliament has also been described as being in line with fiscal programs approved by the IMF. A development analysts say should go a long way to enhance investor and donor confidence in the country. The about $380 million that was approved by the board recently as a result of passing the 5th review should hit Bank of Ghana's account this week after going through the necessary clearance.
Thanks so much for your company. I am Pius Kojo Baka.